Right, a lot of the stuff was lining up, all the tactical short-term stuff, looking at the market being overdone to the downside. I think you could probably say Friday afternoon's little pickup was bouncing where the market had to bounce if it was going to prevent people thinking like it was a little bit unhinged to the downside. I think it was impressive without being perfectly convincing that that was any kind of important downside. I'm looking at the direction of where the path of greatest frustration might be from here. I don't necessarily think a rally making Friday the V bottom is the one. So I think maybe too many of us are looking at earnings season coming around, are looking at seasonality turning positive and feeling as if the market is going to get bailed out. I kind of doubt that that's going to be as neat and tidy as that. However, and I've been working on this since early this year, looking at 2014 as a rough analogy for this year. And why 2014? Because 2013 was like last year, where you had a melt-up market, up 30%, low volatility. Look at 2014's chart. So this, or is that, no, that's now. Right. We have 2014's chart. You had a February pullback. You did not have as good a January. In 2014, though, you did have this Ebola-fed pullback into mid-October. That was nasty and ugly. Nobody really knew where it came from. And you kind of turned around from there and made a new high.
That's another 300 points on the S&P 500 by the end of the year.
What's that?
That's almost 300 points.
Yeah, you ended up the year 11%, and you were basically flat for the year in mid-October. Yeah. So there's been a similar cadence to the market here. I think the difference is back then, a lot of the fears turned out to be kind of nothing. You didn't really have to fear about earnings. It was a cheaper market back then. Rates were lower. Yields were not necessarily the headwind. So I think
the question is it real fears this time, or are we?
Yeah, you don't want to necessarily make that bet, but also recognize that that the credit markets are fine. The credit markets right now are not saying that anything is nasty going on in the economy. So the market can find its way. I still think, though, chopping lower would be the way to get greater extremes in sentiment and oversold.
So, Mike, you said, if I remember your words, you said Friday bounce was impressive but not perfectly convincing, I think are your words.
Yeah, I think so.
What is perfectly convincing in your mind?
It was not particularly broad. It also felt as if because we got through the 2:30 to 3 p.m. period when we did not see a rush of mechanical selling as everybody feared, it was just kind of a lift into the weekend. Also, the Friday, what was it, February 9th, was a intraday low in the Dow that day. We had a rally into the weekend, and it was great. We thought maybe it was over then, and you still kind of chopped lower. So I just think all those things fit in the mix.